Welcome to the All Financial Hour podcast with Steve All.
For a lot of people heading into retirement, annuities, they can feel intimidating, confusing, and certainly complicated. They're supposed to deliver monthly guaranteed income, but some in the industry feel that the real problem is how people shop for them and what they don't ask before they buy. So when you're sitting down with somebody and you're explaining this annuity and it's a great fit for them and all the things, what do you have them focus on before they sign on the dotted line to avoid common costly mistakes?
I like that question, and people, will come to me all the time. We sell more than annuities. I do investments. If you got money that needs managed, I do that. If you need life insurance, I do that. So I do more than I'm not just an annuity shop. I'm an income planning shop, and if annuities work. And I always like it when somebody walks in and says, I hate annuities. And I look at them and say, I do too. Which kind do you not like? And I get that deer in the headlight look coming back at me like, what do you mean, what kind? And I said, the single premium immediate annuity is what most people think of. I just gave my money to an insurance company, and if I prematurely die, they get to keep the money. That's what most people think when they hear annuity. And then they've got fixed annuities. Fixed annuities look a lot like a CD. I'm going to get a set rate for a set amount of time. But I'm not being guaranteed by the government. I'm getting guaranteed by the insurance company. Variable annuities. Variable annuities, your money's in the market. It can go up, it can go down, and there's a management fee inside of it for that. The fixed indexed annuity is one that I prefer, and the main reason is it's got a floor of 0. You cannot lose money due to market volatility. Now, for a floor of 0, there are limitations on how much you could make. You might have caps, you might have spreads. So you got to understand all of those things when you're looking for an annuity. And then the first question that I ask of people, what are you looking for? If you're looking for guaranteed income, I want the product from the insurance company that's going to guarantee me the most income with the least amount of money possible and have a rating that I don't have to worry about faltering further on down the road. Now, if I'm just wanting asset protection, I don't want to lose money due to market volatility. That's a completely different game. Now, I want to know who's got the best indexes and where it comes from there. So having the right tool for the right job, I believe, is very, very important when you're looking at annuities. And people go out and they buy annuities that have income values, but they didn't really need the income. Their pensions and their Social Securities pretty well have it covered. So be careful when you look at that. Look at the riders. Understand those things. Ask the questions. What's my rate of return going to be? I don't know. What's my income going to be? I don't know, or it's guaranteed. It's going to be one of those two answers. So if you're trying to figure out what do you have for an annuity, give us a call. Let us do an analysis around this and tell us what you have and what the best way that you could possibly use that would be. If you're looking for, 1, guaranteed income, or 2, I just don't want to lose money due to market volatility, give us a call. Ask for that annuity x-ray. Allow myself and my team to help you understand an annuity. That way, if it fits for what you're looking for, we could possibly put it into your plan.
Absolutely. This annuity x-ray, great opportunity for you to sit down, discuss these guaranteed income options. Also take a look if you already currently have annuities. Should you upgrade to something different? We can do that for you today. Complimentary. The phone number 636-230-8824. That's 636-230-8824. The website, yourmoneymattersstl.com. The tax deadline is coming up this week, of course, a few days away. So once you've filed, you're done with taxes for the year, right? Well, not exactly. There's actually an article I read on Vanguard.com that said that when it comes to retirement, the real tax strategy needs to happen years, maybe even decades ahead of time. So how do you help clients think beyond this year's return and then start building a tax strategy that's going to give them, I guess, really more control and fewer surprises as they get closer to retirement?
Well, I think that was the biggest change for me when I had to look at taxes. Being in the accounting world, defer, pay with inflated dollars. So all of those things came into play. And I think the big switch for me, because when I first heard about Roth conversions, it was like, why would you do that? Why would you give the government money now when you could give it to them in the future. And a lot of the rules were different then because when you passed away, your kids could stretch it over their lifetimes. So the rules have changed quite a bit. And then I think the focus changed because everything I was looking at is how do I save taxes this year, right now? What do I got to do just to do that? 2, what about taxes over my lifetime? I'm going to have to take required minimum distributions if I saved heavily into the IRAs and tax-qualified accounts. What about my kids? So I had to shift on how I look from that microscope to the macro level when you start to look about taxes. And I think that's the biggest change for myself and a lot of other people in the industry. It used to be spend down your non-qualified assets first, and then your IRA assets last because that's the longest that you can possibly defer. Well, back when I started saving, there was no Roth IRA accounts. So I think the big thing that people need to get started as soon as possible is tax diversification. Or is every dollar you have going into the 401k and the IRA and I'm maxing it all out? That might not be the best thing once you get ready to retire. So that's what they're talking about in planning ahead of time, possibly shifting the way you save. That's why those people out there that you're in your late 40s, early 50s, mid 50s, coming in and sitting down and talking to us might change the focus on how you're saving for your retirement. Having different income sources. Years ago, it was a lot simpler when people had pensions, Social Security, and savings. Well, now most people only have savings and Social Security. Well, what happens if Social Security has problems? Then it's all up to you. So multiple income sources is very important. And then I think people don't think about how they're going to take their Social Security. It's, I'm going to hit 62 or 65 and I'm going to retire and I'm going to turn on my Social Security. That might not be the optimum thing to do. And looking at the fact of what those RMDs are going to look like when you actually have to start taking those required minimum distributions. So those are the things I think a lot of people miss. And then in those middle years, how am I withdrawing? Am I taking it all out of the non-qualified funds and my tax rates are real low? It might make more sense to pay that 10 and 12% tax up to the top and defer some of that and keep a hold of that non-qualified money. So I think that's where you have to look at it. It's a big game. It's not an April the 15th. It's not an end of the year. We're going to do tax loss harvesting. Taxes is something that needs to look at on a regular basis because I believe that reducing or eliminating taxes is the best thing you can do for successful retirement. So if you got more than $500,000 saved in IRAs and 401ks, give us a call. Let us sit down and do a tax analysis for you so that we can figure out would conversions make sense for you in your case, because every case is going to be different. But like I said, reducing or eliminating taxes is the best thing you can do for successful retirement. Give us a call now. Ask for that tax analysis.
Absolutely. More money in your pocket, less in Uncle Sam's. If you'd like to come in for this tax analysis, again, it's complimentary and you have at least $500,000 in IRAs or 401ks. Give us a call today to do that. That's 636-230-8824. That's 636-230-8824. You can also get more details on the website at yourmoneymattersstl.com. Have you ever said, I'll do it when I retire? Well, that's a premise of the Oscar-nominated short film Retirement Plan. It follows a guy named Ray who lists all the things that he'll finally do once he actually has time.
When I retire, I will reply to every email I've ever flagged. I will clean up my desktop. I'll read the 35 years of saved articles on my reading list. I'll finally know if you have the time you have and then it ends, or if there is more time.
Listen, It's kind of sad. Going into retirement should be fun. I'm going to do this, this, and this. And he sounds like he's naming his, last wishes.
I think I'm not. That won't be on my playlist. I can tell you that right now. I love it when people, they have that question. Steve, when can I retire? Will I run out of money? I can understand that because we do get that fear also of everything's fine. We're going to talk about it. We're going to run the numbers, and your probabilities of a successful retirement with what you're talking about are great. And then all of a sudden the day comes and you're going to retire. And the fear starts to kick in. I think that's where it really gets, okay, I'm not going to be getting a paycheck anymore. How am I going to do that? So those are the things by having a plan that we like to look at. Paul and Jody came into the office. They were younger. They wanted to retire. They wanted to look and say, okay, what are we going to do? They didn't want to wait for some random date in the future to retire and do all that. They want to find out, can we retire? So we ran the numbers for them, gather the information, run the numbers, bring them back in, and we sit down and talk with them. And I said, I believe you could do it, but if the markets are not great, you could have a problem in your mid-80s. And I would just as soon talk about it now than waiting till your mid-80s. Mm-hmm. So if you're in that kind of condition and you're asking yourself, can I retire? Will I run out of money? And you want somebody that's going to give you the honest answer, that's what we're here for. Because we look at it, I'd rather tell you, if it's going to be okay, you're going to be okay. In this case, if you're not going to be okay, what do we have to do to adjust it so you can be okay? Work a couple more years, spend a little less money. So those are the things that you look at with a retirement plan that make it all work out. So if you're asking yourself that question, when can I retire? Will I run out of money? Call now, ask for that comprehensive retirement plan. Give us the opportunity to analyze your situation and let you know so that you don't go into retirement sounding like this is the last day of your life. I want you going in, here's what I'm going to do for fun and stuff like that. We want to build that stuff in. I don't want to go into it like, okay, you can retire today.
Thanks for listening to the All Financial Hour podcast.
Insurance products are offered through the insurance business All Insurance Group, LLC, AIG. All Financial Group, LLC is an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, IPW, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by All Insurance Group, LLC, AIG are not subject to investment advisor requirements. IPW and All Insurance Group, LLC, AIG are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. All Financial Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by All Financial Group, LLC.
This radio show is intended for information purposes only.